The Fed's set to meet this week, and while nobody expects a rate hike this time around, the strong U.S. economic data cannot be ignored. With me is Neil Dutta, head of economics for Renaissance Macro, to break down his view on the economy and his expectations for central bank action. Welcome, Neil.
Thanks for having me on.
Thank you for being here. Let's start with the recent data we've gotten here in the U.S. It seems like it's been pretty strong, from housing to jobs, industrial data. How would you characterize what we've seen here, especially relative to the rest of the world?
Well, there's no question that relative to the rest of the world, I mean, the U.S. is doing quite well. I do think that, we have to sort of take some of this with a grain of salt because we did have a very weak first quarter, so we're getting a rebound from that. Now, to the extent that we see some of this improvement extend into the third, then it becomes a little bit more compelling, I think, for forecasters and for the Fed. And we may well be seeing that right now. For example, earlier we got the market PMI for manufacturing. It came in stronger than expected. Obviously, initial jobless claims have remained quite low. We're seeing reasonably good readings in terms of consumer sentiment and consumer spending. So, I think the economy's sort of chugging along here, better than consensus expectations, around 2.5%. I think we get a pickup in growth in the second half of the year. A lot of the drags on growth in the first half of the year probably won't be repeated. For example, inventories unlikely to be as much of a drag going forward. We're looking at some rebound in business investment, or corporate profits are starting to pick up, so that tends to be a leading indicator for business fixed investment. Refinancing activities picking up, so somewhat perversely, right? We had the Brexit vote, rates came down, and people went and refinanced their homes.
What do you make of the political climate, though? Because we just had the Republican National Convention. The characterization of the economy is that it's really, frankly, never been worse. Do you, to what degree is that an exaggeration? And is there anything in the economic data that you could point to that says, we actually aren't doing so well in this area?
I think whenever the party out of power is characterizing the economy, it's going to be doom and gloom. Doom and gloom sells in politics. It sells on Wall Street even, right? I mean, how many people do you know that have made a sort of living for themselves just being bearish on the economy all the time?
Right.
It was
the perma bears.
The economy wasn't weak in as weak as John Kerry was saying it was in 2004, and it's not as weak as Donald Trump is saying it is at the moment. And again, as you mentioned earlier, relative to our peers, there's no. Where would you rather look for a job?
Right.
In America or in Europe? I mean, good luck with that. So, I think the U.S. economy is the strongest developed market economy, and I think that that's going to be the case for the foreseeable future.
And slow and steady may be good. We can see on this chart that we have up here that even though the economic data has been good, interest rates really have remained low, and the Fed continues to continue its path of maintaining low interest rates. I mean, is that the right decision, even though we have seen some uptick?
Well, it's hard to know what the Fed, what we call reaction function, like what is the set of circumstances that will actually get the Fed to move again?
Right.
That's hard to know. I mean, they've told us a number of things. They want to see progress towards inflation in the medium term to 2%. They want to see a rebound in job growth, GDP data better, no shocks. But you could see all those things sort of checked off, and the Fed's still not going, right? So I think that what the Fed is basically doing is kind of gravitating to this role of being a sort of backstop for the global economy. And I think what you're going to see in that environment is inflation in the U.S. run a lot firmer for a lot longer to offset the disinflation everywhere else. And, bond yields are lower, and that's one of the reasons why the stock market's done so well. Going forward, I would think at this point, we should see a better sort of composition within the equity market where earnings are picking up. So that helps equities, but at the same time, you see yields going up. That's a negative for
I want to look at this other chart here from you, basically showing that a lot of the contribution of the rally that we've seen this year is because of this low rate environment, as opposed to necessarily strong earnings or other factors.
Yeah, as I say, I mean, I think the composition is going to get a bit stronger going forward.
Right.
With earnings picking up.
Looking ahead to the Fed meeting, though, what is your big concern, say, when it comes to inflation? What are your expectations for inflation? We've heard from Janet Yellen that inflation is still not yet at target levels in order to prompt them to increase rates or need to immediately. What's your take on that?
Well, to me, it's interesting how much the narrative and the story they've been telling has changed within the last year. I mean, remember, one of the reasons why they wanted to get going now was to go more gradually later. Now they want to actually seemingly wait for inflation to hit their target before they go again. So it's been a pretty meaningful change in strategy. You know, look, I think inflation is picking up. I think that's unambiguous. We're seeing it in wages. We're seeing it in rental prices. If inflation continues at the rate it's been going, we're going to be at 2% on core inflation by the end of the year. So I don't think that's going to really concern the Fed, but I think what's going to be interesting for markets is once the Fed starts raising rates and inflation remains quite sticky, that could start to spook the bond market a little bit more.
Got it. Well, we'll be looking ahead to that. Thanks so much, Neil, for your insights. That's Neil Dutta of Renaissance Macro. Do you think the economy is strong? Let us know in the space below or on the Yahoo Finance Facebook page.